Hey everyone, welcome back to the channel. If you're new here, I'm the Green Guru, and today we're diving headfirst into the world of smart investing for 2025 and beyond. Listen, we've got tariffs rattling cages, the market acting like a bucking bronco, and AI stocks going through the roof. It's enough to make your head spin. But let me tell you something, that's just noise. We're going to cut through the hype and get down to brass tacks, looking at how the pros, the old school investors handle this kind of market chaos. We're talking time-tested strategies, the kind that build wealth, not panic. So buckle up, because this is going to be a wild ride. You know the drill, folks. Market takes a dip, even a little one, and suddenly the financial news channels are screaming bloody murder. It's all doom and gloom, right? Tariffs, crashes, inflation. They love to scare you because fear sells, plain and simple. But here's the thing, that fear, it's a trap. Old school investors, they know better. They've seen it all before. They understand that market downturns, those aren't the time to panic and dump your stocks. No, sir. That's when you dig deep, you do your homework, and you look for opportunities. Because let me tell you something, those opportunities are out there. Think about it this way. When everyone else is running for the exits, who's left standing? The people who kept their cool, who saw the bigger picture. They're the ones buying up those undervalued stocks, the ones everyone else is too scared to touch. And you know what? When the market inevitably bounces back, who do you think comes out on top? That's right, the ones who didn't let fear cloud their judgment. The ones who stuck to their guns and bought when everyone else was selling. That's how you build wealth, folks. Not by following the herd, but by being smarter than the herd. So next time you see those headlines screaming about the sky falling, take a deep breath, step away from the ledge, and remember what I told you. Don't let the noise drown out your common sense. Let's face it, the market is going to zig and zag, it's going to have its ups and downs. It always has, it always will. But you know what separates the amateurs from the pros? The pros, they don't sweat the small stuff. They're not checking their portfolios every 5 minutes, freaking out over every little dip. They're in it for the long haul. They've got their eyes on the prize, and that prize is long-term growth. Look, if you're investing in solid companies, companies with strong fundamentals, real earnings, and a bright future, then you don't need to panic when the market throws a tantrum. In fact, those downturns, those are your buying opportunities. That's when you double down on your convictions. You buy more of what you believe in, and you let the market do its thing. Remember, time is the investor's best friend. The longer you hold on to those great companies, the more time they have to grow, to innovate, to compound your returns. Don't let short-term market noise derail your long-term vision. It's like trying to time the tide. You're just going to get wet. So, take a deep breath, tune out the noise, and remember why you invested in the first place. Trust your gut, trust your research, and trust that the market will reward those who are patient and disciplined. Now, let's talk about value, because in this market, you need to be smart with your money. I'm talking about finding those diamonds in the rough, those companies that are trading for less than they're actually worth. These are companies with strong cash flow, solid management, and a track record of innovation. They're not always the flashiest names, but they're the ones building real businesses, and that's where you want to be. Look, I know everyone's excited about AI these days, and for good reason. It's a game changer. But don't get caught up in the hype, chasing after the next big thing. You want to be in companies that are already leaders in this space, companies like Microsoft and Nvidia. These are companies with proven track records, and they're still undervalued compared to their potential in the AI market. Remember, investing isn't about chasing the latest fad. It's about finding value. It's about buying $1 for 50 cents. It's about being patient and letting your investments grow over time. And that's how you build real, lasting wealth. So, do your homework, find those undervalued companies, and don't be afraid to be a little contrarian. Sometimes the best investments are the ones nobody else is talking about yet. All right, let's talk about diversification. This is one of the oldest rules in the book, and for good reason. You never want to put all your eggs in one basket. Especially in this market, where things can change at the drop of a hat, you need to spread your risk. Think of it like this. You're building a portfolio of investments, and you want to make sure it can weather any storm. That means having exposure across different sectors: tech, healthcare, energy, consumer goods, you name it. Because if one sector takes a hit, you've got others to pick up the slack. Don't get me wrong, I love a good tech stock as much as the next guy, but you can't have all your money in tech. You need to balance it out with other sectors that are less volatile, sectors that provide stability and income. That's how you create a portfolio that can withstand market swings and deliver consistent returns over the long term. Remember, diversification isn't just about protecting your downside, it's also about capturing growth opportunities wherever they arise. By having your money spread across different sectors, you're ensuring that you'll benefit from growth in any part of the market. We've all got battle scars, folks. We've all made investing mistakes, especially when the market throws a curveball. But you know what they say, the best lessons are often learned the hard way. And believe me, there were a lot of hard lessons learned during the dot-com bubble and the 2008 financial crisis. One of the biggest takeaways from those crashes was the importance of patience and discipline. Too many investors got caught up in the hype, chasing after the latest hot stocks without doing their homework, and when the bubble burst, they panicked and sold at the bottom, wiping out their savings. But the investors who weathered the storm, the ones who came out ahead, were the ones who stuck to their long-term strategies. They didn't let fear dictate their decisions. They stayed calm, they stayed focused, and they rode out the storm. And that's the key takeaway here, folks. Learn from the past, but don't let it paralyze you. Don't be afraid to invest, but do your homework. Have a plan, stick to it, and don't let your emotions get the best of you. Because in the end, the market rewards those who are patient, disciplined, and who understand that slow and steady wins the race. So there you have it, folks. The market's going to be a wild ride in 2025 and 2026. There's no doubt about that. But remember, volatility is the price of admission to the stock market. It's going to happen. The key is to be prepared, to have a plan, and to stick to it. Don't get spooked by the headlines, don't chase the latest fads, and don't let your emotions get the best of you. Focus on the fundamentals, find value where others fear to tread, and diversify your portfolio like your financial future depends on it, because it does. If you found this video helpful, do me a favor and hit that like button, subscribe to the channel, and share it with someone who needs to hear this message. Remember, knowledge is power, and in this market, you need all the power you can get. Thanks for watching, and I'll see you in the next one.